Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 22nd of November 2024. First chart is the US Dollar Index Futures. You can see this is a wider view than normal, and you can pretty clearly see that price has gone roughly sideways for an extended period of time. Price is attempting to break out here. This is the highs of the range through here. I'm expecting there to be reduced supply in this little zone here, with supply increasing up here. So if we move in a bit closer now, you can clearly see that price pulled back from the previous close this week and tested for supply. And supply must have been found to be low because price moved higher in response and pushed up into this zone where I anticipate that selling pressure will be reduced. Price was easily able to float up into that area because there isn't a great deal of supply expected there. A little bit was drawn out this week where the price closed off its high. That was most likely due to the market just leaving this highs of the range through here and just copying a little bit of selling pressure there to see if the market will pop back into the previous sideways range. If price is able to establish itself in this zone, I expect the market will be able to continue higher, but I do expect that there'll be increased selling pressure drawn out up here if the market does push up into that price level. This week's rise in price has put many of the associated markets under pressure again, especially the currencies, which you'll see as we move along. This is the E-mini S&P 500 index futures. The highs of the range come through here. Price pulled back last week, responded nicely this week. Now, spread's quite narrow this week and volume was increased. That can be a bit suspicious that selling pressure has emerged. Well, there would have been some supply drawn out, no doubt. But did the sellers gain the upper hand or the buyers holding the upper hand? That's the question. Overall, price is trading within the range of this stronger up bar and in the top half of that bar, which is generally quite strong and bullish. If the period of consolidation can be completed in the top half of this up bar, generally you'll see the market move higher in response. But the question is this narrow spread up bar on increased and slightly above average volume showing that selling pressure was gaining the upper hand, or were the buyers in control still? Best way to tell is to look inside that bar. We go to a daily chart now. Look inside that bar. 1, 2, 3, 4, 5. These 5 bars make up this week's trading. And the first bar was a narrow spread up bar in response to this down bar on lower volume and below average volume. So that was the market just floating higher on a lack of selling pressure. The next bar saw the market test for supply below the previous bar's close. You can see the volume was increased and slightly above the average. So there was some supply drawn out, but the market has bought that supply because otherwise it wouldn't have closed higher in the end. The next bar sees a very similar thing. Price has traded below the previous bar's close in a testing for supply sort of style. Volume was again slightly above the average. The next bar also tested for supply and moved higher on an increase in volume. This is all buying support coming in like this. If supply was overwhelming, none of these bars would have closed higher or level. They would have closed lower. And the final bar this week was mostly a test for supply below the previous bar's close, and market just floated higher on a lack of selling pressure, which is a reduced volume, about average overall. So this appears to be the buyers moving in, not the sellers taking over. This was the market pulling back, testing the market for supply, absorbing the supply that's been drawn out, and then popping up to close just slightly higher or level every day this week. This looks like buying support's coming in. Now you still need confirmation of that with the subsequent trading over the next few days. But that being said, this looks like buying support's come in to the market, and that would be confirmed to some extent by the market consolidating right up high within the top half of this bar's range. That's generally a sign of strength for the market. The market hasn't needed to pull all the way back towards its lows before it's able to consolidate and absorb the supply being drawn out. This market's doing it all right up in the top half of that bar, and generally in response, given reasonable trading conditions, the market will push higher following that. US Treasury 10-year note futures traded as an inside bar this week, inside the previous bar's range, on increased and above average volume. This is buying support coming in. This is the market consolidating and absorbing supply. And the fact that price closed slightly above the previous close suggests that the buyers are holding the upper hand in this market. They're absorbing supply and perhaps preparing for a push higher in response. Copper price futures. Copper price futures produced an absorption bar this week. The market broke down last week here. It's only a minor breakdown and down to the next level here. And the market has not attempted to push higher in response. The market's attempting to consolidate and absorb the supply drawn out at this level, which is kind of what we expected to happen in response. You can see that volume reduced considerably this week. So that suggests that selling pressure reduced considerably this week. And that being said, there was no serious attempt to push higher. This was the market absorbing supply down here near the lows of the bar. So you would expect the market would probably continue sideways here. It does also suggest that some buying support has emerged around this $4 level and just above. Gold price futures. Gold price futures reversed this week, which would suggest to you that last week really did overshoot its levels, at least to some extent. This was a little bit of over-enthusiastic selling towards the downside. That's probably reflected in this very high volume that emerged last week. Price overshot its level. It probably should have found support here, but people get a bit carried away. And what's happened is the market's recovered nicely this week. And the recovery's taken place on much lower volume, which suggests that there's been a supply vacuum formed, probably temporarily, as the market sold off last week. That's allowed price to float high with relative ease this week and close above the previous bar's high. The most likely response is an early test for supply next week, like this, and then a continuing push higher if selling pressure is found to be low. You'll end up with a bar that looks somewhat like this. Next week, where there's been some testing for supply below the previous bar's close, and then a modest push higher in response. Silver price futures. Silver price futures recovered somewhat this week, which was expected. Here's the highs of the range through here. This was the attempt to break out. Prices pulled back. We saw that buying support probably appeared to be drawn out down here just below the highs of the range, where you would expect selling pressure to ease somewhat, and that's what's happened. And prices just floated up to the highs of the range this week on reduced and about average volume. So that's pretty much exactly what you would expect to see. Now, in response, you'll see a test for supply, similar to gold. The market will follow gold in that respect. And then if gold does float higher in the end, this market will probably attempt to push higher. This market's always a little bit more volatile. So it'll pull back alongside gold initially, and then if gold does push higher in response, this market will probably push higher with a bit more vigour. Like crude price futures, we were looking at a bar that was threatening to break down last week and wondering if buying support would emerge, as it has done previously, and buying support did emerge this week, and price moved higher on reduced and below average volume. So price has really just floated up this week. It's not no demand. No demand would have a narrower spread than that. This is the price floating higher on a lack of selling pressure. Highs of the range come through here like this. So I don't anticipate any serious break towards the upside here and breakout. Price could move up to this level here, or it may just test for supply in response like this next week and trade relatively calmly sideways. This is the Euro-US dollar currency pair, and price continued lower this week and broke below the supporting levels that we expected to be respected. This is a pretty serious breakdown here. It's not a confirmed breakdown yet, but it's likely price has broken down. It would take a pretty good effort now for price to recover back into this level here. It's still possible. It's looking less likely at this point in time. And there's not a great deal of support at this level nearby. If we go out wide and have a look here, you've got a level that comes through here. Where the market could find support. Lows of the range are through here. So there's certainly going to be support found down here. This is below the $1 parity level. There's some modest support likely to be found in here, which the market kind of did find support this week. It's dipped below and into that level and just popped up to close just above it. So it found support on top of this level. But throughout here, I expect this won't contain a great deal of support. And if price breaks below that, it'll probably come down to this level, which is sort of similar to the US dollar to some extent in reverse. So you can see where the market is. It has found some modest support on top of this potential support zone here. It's not very strong. Just looking at what's happened in here, this isn't giving you a great deal of confidence that a lot of strength will be found in this level. And if the US dollar does continue higher, and there's some chance it will, it'll break through that level relatively easily and find itself down here without much support expected until price moves down here. So worth watching that one. British pound currency futures also pushed lower this week, but not to the same extent that the euro did. Here was the support level we were looking at. Next level's down here. So this market, while it did move lower than the previous bar's low this week, it didn't break down to the same extent that the euro has, probably because back here there was a reluctance to move lower. So this market hasn't broken below this level already like the euro has. Euro's already down here. So if there is continued strength in the US dollar, this market will probably work its way down to this 124 level. If the US dollar doesn't continue higher, this market may pop up and attempt to find some support at the 126. Japanese yen currency futures. You can see Japanese yen currency futures have traded inside the previous bar's range this week on increased and about average volume. This was the market absorbing supply and consolidating sideways. This was an attempt to support the market. It's only a moderate attempt, but it's an attempt all the same. And the market is trying to consolidate. It didn't reflect the strength in the US dollar by moving lower. Price has moved sideways almost perfectly. So this is the market absorbing supply and attempting to consolidate, possibly for an attempt to move higher at some later date. Australian dollar currency futures. This market also traded inside the previous bar's range this week as an inside bar. Volume was reduced and below average. This was the market consolidating and absorbing supply as well. You would suggest the market did overshoot its lows last week. This was an overshoot to the downside. Next level lower is down here. There was support expected in this zone here. The market overshot it last week, so it's recovered somewhat to where it perhaps should have closed last week, but there's a bit of over-enthusiasm in the selling pressure and a lack of buying support as well, which saw the market overshoot to the downside, and it's recovered and prices closed roughly around the 65-cent level. I expect the market will only move sideways in response. I don't expect any great push higher, especially if the US dollar is strong, and I anticipate it will be. You may find the market floats a little higher if the US dollar tests for supply early, and then price comes back a little bit to trade roughly where it is this week in response next week. Bitcoin futures. Bitcoin futures continued higher this week, kind of how we expected. The market did test for supply initially below the previous bar's close and then pushed higher in response, which is pretty much exactly how we expected things to play out. Volume reduced slightly this week and spread narrowed slightly. The market did reach the $100,000 level this week, which was acting a little bit like a magnet, and price did reach it and moved up to $100,170 at some point during the week. The market's now reached this target level. These big round figure numbers are always like a magnet to the market, whether it's towards the upside or the downside. The market's reached that level now, so I won't be surprised to see the market test for supply now and consolidate sideways. There will be some selling pressure drawn out, and the depth and duration of the period of consolidation will give you a good measure as to how strong this market really is. If the consolidation takes place right up high in this bar's range, price will likely continue higher very quickly in response. If the market is forced to pull back more deeply to absorb the supply, you may find a sideways pattern emerge, something like what happened back here. Perhaps not to that extent, but a sideways pattern taking place to absorb all the supply that's been drawn out, build some strength up again before the market pushes higher again in response. So just watch how this market trades. There may be an initial attempt to push higher because there's always a bit of over-enthusiasm in this market, but I expect the market has now made its gains up to a key level, $100,000, and it will attempt to now consolidate in response up here. It'll attempt to do so, at least initially, right up high in the range, and we'll just see how much supply is drawn out. If not much supply is drawn out, the market will probably turn and move almost straight away within a week or so. If ongoing supply is drawn out and the price is forced back more deeply, you may find the market requires a more elongated and extended period of consolidation. Okay, back to the US dollar index futures just quickly. You can see where we are. It all makes good sense. Here's the highs of the range. Here's the next serious level above. There's a bit of a supply vacuum expected in here. There will be supply in there, but it won't be to the same extent as what was found here at the highs of the range or to what I expect will be found in this level. It'll be reduced. And if the market is showing strength, it'll move through this level with relative ease compared to what's required to break out and what will be required to push up into this level. Okay, thanks for your time. Hopefully that was worthwhile watching. Back again next week. Thank you. See ya.